presentation, but before I dive into the presentation, I will just, in a very simple form, try and explain what a mortgage guarantee is. So, what we do is, let us say somebody wants a loan and he is not eligible for that loan, or he is not eligible for the loan that he wants for a variety of reasons. Let us say somebody is 54 years old, he retires at the age of 60, and the bank where he is applying for a loan caps the loan tenure at retirement. Then he is eligible for a 6-year loan. With a guarantee from us, the bank may give him a 12-year loan. I am giving an example. As a result, his affordability goes up, he is able to take a bigger house, his EMI is reduced, and so on. Let us say somebody is working as a private driver. Many lending institutions may not be willing to lend to a profile of that nature because of the uncertainty of income and employment. Therefore, we come in as a guarantor. We take a fee that the borrower pays and guarantee the loan. We typically guarantee 20% of the loan amount. 20% of the loan amount is roughly 2 years worth of EMIs. So when the borrower defaults, we start paying EMIs on the borrower's behalf while the lending institution does the recovery process. There is a possibility of moral hazard in this because there is a guarantee on the loan. So at every stage, we check whether the lending institution is following optimal recovery practices. So broadly, that is how a guarantee works. When the loan is settled, when the property is sold, if the bank makes a loss or the lending institution makes a loss, up to 20% we offer first loss. If they recover the entire money, then whatever claims we have paid, they return it to us. So very simplistically, this is the process in which the mortgage guarantee works in our country. The reason it is called guarantee and not insurance like it is called all over the world is insurance is paid out when there is an event. Life insurance at death, accident insurance when there is an accident, health insurance when you are unwell. Here we start paying claims before the actual event of loss happens. Therefore, it is called a guarantee. So, any questions on this one? I mean, I just thought I'd first explain what a mortgage guarantee is. Yeah, that I'm just. Yeah. The public-private partnership between National Housing Bank, Genworth of the US, the World Bank through IFC, which is their private investment arm, and the Asian Development Bank. Today, we have 5 promoters. We have ENACT, which is Genworth's. Genworth is a firm which was originally GE Capital, and GE Capital, when GE decided to divest their insurance businesses, Genworth was formed. ENACT is the American arm of Genworth. Sagen is another Canadian mortgage insurance company. So they are our 2 largest shareholders. NHB, ADB, and IFC continue to participate as minority shareholders. With the RBI, the regulations that govern us are specific to the mortgage guarantee industry. We now work with nearly 23 lending institutions. We have about 150 employees, and we have guaranteed nearly 20,000 crores worth of housing loans. Our regulation allows us to guarantee only home loans. We are not allowed to guarantee any other asset class, and this regulation internationally also. Journey. In 2008, the regulations were drafted. 2012, our company was formed. 2014, we did our first deal. 2017, we started crossing the monthly run rate of 100 crores. 2019, we started crossing a monthly run rate of 300 crores. We also had more than 100 employees. We also conducted something called the India Mortgage Leadership Conclave, where we get all industry leaders across lending institutions to participate in a conference in Bombay. Currently we do over 500 crores a month. We have offices in Noida and Bombay. We have employees in nearly 30 plus cities in the country, but offices in only 2 places. In South, we have about 23 employees across Chennai, Bangalore, Hyderabad, Coimbatore, and other towns. And what is the value that we bring? As many of you would be aware, housing is the second largest contributor to economic growth after agriculture. And if you look at the Indian economy also, we are now growing at about 6.5% a year, but housing is growing at double that rate, 11 to 12%. Housing is good both for financial inclusion, housing is also good for economic growth. So what do we do to promote the housing ecosystem? Firstly, if you look at it from the perspective, the customer gets a wider range of lending institutions to choose from. Because in line with the lender's risk profile, a customer's opportunity to borrow from more lenders goes up. They are also able to take a home ownership early. From the perspective of the ecosystem, we are able to ensure financial stability because we are coming in as a third party shock absorber. In a normal housing lending transaction, it is between a lender and a borrower. We are coming in as a third party with an independent capital base to act as a shock absorber in the event of default. And from a lending institution's perspective, it is quite obvious they are able to expand their risk box. They are able to lend to people they were earlier not comfortable lending to, and in the event of losses, we are anyway there to cover. Plus, as more and more lending institutions are moving to the Ind AS form of accounting as per the regulation, they will also get a significant benefit on their expected credit loss because our guarantee is unconditional and irrevocable. So to that extent, that part of the loan amount, the expected credit loss can be nearly zero because we will cover it unconditionally and irrevocably. So as more and more people move to the Ind AS accounting regime, they will begin to recognize the expected credit loss benefits that come with an unconditional guarantee. So the borrower benefits, the ecosystem benefits, the lending institution benefits. Our largest contributor is LIC Housing. We have just started off a pilot and a project with SBI. We work with a whole host of NBFCs. We work with Piramal, who has taken over the DHFL business on the retail side, and they are growing significantly into becoming a large affordable housing player. We work very closely with Aditya Birla Housing. We have just tied up with Federal, which we hope will give us a toehold into the south market. So one of the things, if you notice about the housing finance ecosystem, it is that the top 5 players control nearly 65% of the market. So between SBI, HDFC, ICICI, Axis and LIC Housing, 65% of the market on new originations is controlled by 5 players. So there is some level of asymmetry that exists. 50% of the housing origination is in just 6 to 7 cities. So we believe that with a product like ours, where we have an average ticket size of just 19 lakhs, we believe that with a product like ours, we will help people go deeper into interior geographies where they are currently not comfortable lending to the extent the opportunity exists and drive financial inclusion. So if you look at our current ticket size of 19 lakhs, it is down from 26 lakhs 4 years ago. So we are progressively bringing our ticket size down by doing more and more affordable housing lending, which is in line with the charter for which we have been created. We do loans to hawkers, we do loans to auto rickshaw drivers. All of these are profiles which earlier were not part. So we are well capitalized, we have strong shareholding, we currently have enough capital for the next 3 years of growth, and we have committed shareholders who will India Mortgage Guarantee Corporation. We are here in Chennai today to interact with the Chennai-based media. We are India's first mortgage guarantee institution, incorporated in 2014. We have now guaranteed more than 100,000 borrowers, worth more than 20,000 crores. We work with 23 lender partners. We are a public-private partnership, and our primary focus is to enable home ownership and promote financial inclusion. It was great interacting with everybody today, and we hope people are better informed about what we do.
Any question? Future target, sir. Next year target.
We aim to grow significantly and guarantee over 9,000 crores this year, and our objective is to grow at a run rate of greater than 30% year on year for the next 5 years after that.
So what is
The borrower benefits by using our product because he usually gets a higher loan amount. or a loan from a lending institution that he would ordinarily not be able to access. Our average ticket size is 19 lakhs. In fact, it has reduced from 27 lakhs to 19 lakhs because we are promoting more and more affordable home buyers. And over the next 3 to 5 years, we expect our ticket size to be between 12 to 15 lakhs, and we want to expand home ownership among affordable housing buyers. Our role is to pay EMIs on the borrower's behalf to the lending institution while the foreclosure process is underway. We'll talk about that after this over lunch.